Hey everyone, this is DayTraderRockStar, and tonight I'm going to do a video on the basics of chart reading. And I'm going to kind of mix this in with, the ABCs of chart reading, how important it is, to also talking about today's events and what the charts are talking about for future trading going forward from this point. So you might come out and see this video 2 months from now and say, well, this is not, this is dated. Well, it's not dated. This is mostly an educational video. We'll be showing you some of the setups that possibly could happen in the market. And what's going to be good about this is you can actually go back and see how it works. So we're going to call the market here and give us some different outcomes based on technicals. And if you do happen to see this video 2 months from now, you should go back and take a look at the market at that point and at what it's done and see if it reacted, and it'll give you good confirmation on some of the rules that you're going to hear tonight. And again, I want to use that as a stop-off point right there. The term rules, First of all, I trade. I do a radio show, and a lot of you know me. Maybe a few of you have never heard of me. I'm DayTraderRockStar, and I DJ DayTradingRadio.com, DJ and trade live, and we do the education. And it's just a great community. And it's basically, when I trade, I work off of a system that I've developed over the years called the high probability setup system, and it really takes multiple indicators and kind of lines them up, and it's basically sets up all the rules. We're talking about rules, and rules could be anything. And the hard thing about talking to other traders, if you've been trading, it's hard to teach someone to trade your style. They have to find something that's good for them. Everyone, trading and personality types and different risk rewards and stuff, really you have to have a balance of everything. So it's not like you're going to learn someone's trading style. You're going to adapt certain rules of the trading, add what is useful for yourself that you found in your experience, and maybe things that you need to really concentrate on more, and then you build your own little style. It's okay to use the stochastics similar to what I do, and I'm sure a lot of people do, and it's okay to use trend lines. And these rules that you're going to use, it's important to have them as the backbone to your style, to your method, because just like in nature, there's certain natural laws, and in trading too, price action, trends, basically levels of support and resistance have been retested. These levels, are there. They'll always be there. It's nothing that you can do. There's no smoke and mirrors about them. And when they do set up, it's up to you to recognize that and make sure that all those are let them help you. Let those rules help you. And again, just looking at the S&P chart right now, and you might just look at a basic chart like this and say, well, yeah, we're pushing back down, but this chart tells me a lot. First of all, I have my stochastic indicator here, and I could tell it reacts very well. And when I look at a chart, from looking at them years over years, you automatically start to see channels and stuff. You get to read what happened in this chart. Even if you passed a trade up, you could tell it was a great opportunity because these are the rules. Here's a rule for a head and shoulders topping formation where you look for that breakdown of that trend and that first retracement, and you get the stochastics to get overbought, but that high does not take out the recent high, and that's your short setup. Instead of a breakdown, a lot of people would say, breaking down out of a head and shoulders is where you really want to get in, but I prefer to get in when the stochastics start to top out, yet the price is not breaking above the recent high, and then you start to see the weakness in the crossover, and that crossover is really the key there. At that point, you're in here instead of being in here, and lots of times when you're in here, you get that pushback up there before the follow-through. But in either case, you follow this market down to this point, and you're oversold again, and just from pivot areas and stuff where the market likes to make those reversals as one of the indicators. We use the stochastics just as a timing indicator. So at this point on the daily, we have a better chance of that bounce happening. And you can see actually it did bounce. So this all breaks down into the methodology, and the methodology is what I teach every day. And there's so much more to it. So when you recognize there's pivot areas, and what I do is look for pivot areas in the on the chart. So a pivot area is basically where a stock moves from one direction to another. And basically that you can really distinguish that on the charts, and you're seeing this what it calls micro or smaller changes of trend, and and just patterns being formed out here. So once I have 3 of those pivots, then I really have a recognizable pattern. 3 pivots and 2 lines make a straight line. That third line, I always try to put a parallel line in here so you take the equal distance. But as you can see, as that pattern starts to form out, it looks more and more like almost a textbook channel. If I close this one off a little, you could always be off a little. It's like, if it looks like a channel, it feels like a channel, it's most likely going to be a channel. And from that point on, we got down to another level, which was good. But we got a nice crossover and momentum switched, and we had the upside motion. And we're approaching that overbought level. Now, there's little things that I could tell you about the stochastics embedding before an extreme level, and that's a sign of bullishness for a final push higher. We also know that downward trend line and that recent high over here at 1336 was a good point to look for a short-term short. And we could see that very easily on the chart. We popped right up against that. So all these levels are rules of the trade. No matter what you use, you can't help but look back and say, well, this worked. This, everything, give it a good ratio of success versus wins. You'll always get that. And then we break it down to, once you identified that pattern, we could always break it down to the 60-minute chart. And the 60-minute chart is going to give us our better entries and our better exits. And, just a faster time frame. And this is basically the same chart we're looking at, but on a 60-minute time frame. So you can see the head and shoulders top here. This is where we broke down. We kind of flagged out here, broke down. But each time now on the 60-minute chart, we start to see, the timing becomes faster. Instead of a major move happening every couple weeks or so, we get it every couple of days. So we have nice rotation and stuff. And again, once you start to establish the methodology, the 5 indicators, you know what you're looking for. You're looking for that extreme stochastic reading. You're looking for that recognizable pattern based off the 1, 2, 3 pattern or any other recognizable patterns that you could see, flags, and looking for the stochastics to line up with that. And then also trading those individual patterns. And when you trade those individual patterns, you're looking for trend lines. So you want to actually take the trade on the best part of any pattern. So if it's a flag, you want to get the bottom part of the flag for a breakout to the upside. If it's a bearish flag like this, you want to get to the top part of the trend line so you can get the breakdown out of flag. And now overall, a new pattern's formed, but we start to see that the stochastics here have been overbought. Now are oversold, and basically going into today, calling for that rally, basically just because of the 60-minute. And, again, you might be listening to this video months from now, and the situation in Europe has passed, but I tell you right now, the crap that's going on in the news on Europe, if you listen to that, it's hard to believe this market has any upside in it. Yet, technically, it kind of throws away the news and technically continues to act technically sound. And that's why it's so important to pay attention to the rules. Even in the face of Spain and Europe and everything today, the market was up 160 points because we got that oversold level on the 60. And we knew about that. You knew it. And I said, well, what, you're going to look for this crossover and a rally. We closed very strong. This leaves us open for a possible breakout of an inverted head and shoulders pattern. And, again, you could see on that daily chart, which we already identified as a downward channel, a breakout of that recent high at 1336 would represent a break of that channel and be very bullish. And, again, all in the face of what's happening in Greece. And just to remind you, this Sunday, Greek elections will be happening. So at the end of this week, even though we're bullish going into the end of the week, historically, there's so much risk holding into the weekend. It's going to be interesting to see if the technicals hold up, or do we get that break in the technicals and we sell off because of news. And that's one of the rules of the game with technical analysis. There's always going to be a time when a pattern breaks down, and typically a pattern breaks down because there's an outside influence. And I thought of a new analogy today with my many analogies I share with you on the radio show. But I actually, I came up with this one right here, and I said, you know what? Hopefully I could just remember it now. Well, anyway, the market has a trend to it. It's like a stream, and if you like to fish, you're walking along streams and stuff. You know how a stream has its ebbs and flows, and it goes around corners and comes back, and it continues to have that directional flow, and that's what the market is, and that's what technical analysis is. It's a channel, might be acting well, it's a nice defined pattern, a nice wavy pattern, until news comes out, and news can break down a pattern. And that news is like a big tree falling across the stream. It takes the stream out of its pattern and diverts it and crashes it. And eventually that's, all that water sucks back in. And you start to head back in the original direction. But, short term, you're distracted by your pattern. And that's what we have to watch out for. So when times like these are showing themselves, we have to, at least cut back on shares. I like to cut, just scale back. You always feel you want to have some skin in the game, but you have to be very cautious at these times, because technical analysis, even though it is great, when news comes out, you have to, you have to respect that. And going into the next few weeks, we have a lot of news. So right now, this looks kind of bullish. Like I said on the weekly chart over during the watch list, the weekly has continued to show, a positive trend. And this recent pullback on the weekly stochastics is a bullish signal. We hold in the 200. There's a lot of bearish talk out there about this market, and just even looking at something like this is very promising. We'll see what happens after Greece and Europe clear up, if anything comes of that. But that's the markets these days, and I do want to get back to the main theme of this video is technical, how to read a chart, and we're going to go back to that. We're going to go back to that 60-minute chart, which is really a go-to chart these days, and we're going to watch that 1336 level. We did break out of this channel, and a channel breakout basically identified the channel by 3 points. You draw 2 parallel lines, and then once they start to see other pivot areas, you can adjust that channel a little. But once you recognize a channel, you have a better opportunity the closer you get to that channel indicator, that line, that trend line, and you have that lining up. Then you start breaking it down to the micro time frames. And today, as a good example, at on the 5-minute chart, we see a nice little rally here. And why did we get a rally right there? Even though we were set up, this is really the first time we were set up on the 60, the 60, the 15, the 5, and the 5-minute chart. All 3 important time frames were all set up in oversold levels, and that's really the core of an HPS setup. Because you can be oversold here on the 5-minute, but the 15 might be heading down, or the 60 might be heading down. And you're waiting, and then once they all line up, it's just like sometimes it's just a perfect thing. So right when this happened was about 1040. The low here was 1035 to 1040. 1035 to 1040. So that's the 5-minute chart. You can definitely see an oversold and overbought, just defined by the 2080 line. So we had that. That was a check. You put that in your check mark box. Do you have anything else you could look at here? Yeah. You have a kind of a downward channel, no doubt about it. Is it on a trend line? No, not exactly. But is there any things that you could probably read into this? Well, the oversold stochastic. So we'll break it down to the 15-minute chart. All right. And then when I look at the 15-minute chart, and again, this is today, and you could see that we were oversold on the 15-minute chart at the same time frame. And that was that 1030 to 1040 level right here. So that was a check. Then we break it down to the 60-minute chart, and that's what really caught my eye today, is because at the 60-minute chart, we got pulled down early this morning into an oversold level. So watch for that crossover, and boom, we had it. Now, again, it works in the midst of all this news, so you have to put some. You have to give it some attention when it does line up, and that's why it's important to use these indicators as just an additional set of rules for whatever style of trading you do. This might not be the right time frame for certain people's trades. Some people might be faster traders. They might be scalpers that trade, a different time frame or something. But it's even if you come to a point where you can recognize that this is a better opportunity for a long, Then you know a directional trade for your scalps too. So it's important. That's what I try to do during the day. Day trading radio is try to show you these setups as they're happening. In some cases, take them. But it's about the multiple time frames. It's about recognizing the patterns and believing in them, and understanding that the news will sometimes ruin your day, but do not that discourage you on certain things. My favorite patterns to trade, I definitely like trending stocks in a channel, and a downward channel. Flags are really important, bear flags and bull flags. And these W patterns, the bottoming and topping patterns, where I use the stochastics as and price as a divergence. So normally we're looking at a price that's moving lower and lower. Here's an example right here on the 60-minute chart. Here's a low, here's a lower low, and here's a lower low. And each time the stochastics kind of get oversold here, we get that lower low until we get that nice rotation. We get oversold again, but we have the price here, a higher low. So that's a stock price divergence. So the trend is stopped there, and this is your first change of trend, possible change of trend. Important. All right, well, that's what I wanted to get out to you today, just a little update on how to read charts and how important it is to have the wind in your sail, so to speak, keeping the indicators lined up properly, and make sure you know what direction of the market the potential is to move. One other thing I wanted to show you, as I just launched this, we were talking about the high probability setups, which is basically that core methodology. Now we do that, offer that to the members of Day Trading Radio, and I wanted to update you on some of the things from last week. I meant to get this video out earlier this week, but I left a lot of the setups on for last week just to show you the new charting that we're using. So here was a short 72. All right, so here's some of the new ones that we have on here. Lexion, Corning for this week. Corning triggered. That's a great setup, by the way. And what you do is you click on the setup, the chart will come up. Hopefully you can see all this. And then you have your chart. It'll come up and it'll describe the entry. I have the buy levels, the buy zone, the target, the stop. And then what's great about this is, we know we did get our buy trigger on this. And the video that goes along with it kind of outlines everything. But then you're able to actually click on the arrow there, and the chart will update as each day goes by. So you actually see, you can even look back and actually basically and just kind of back test things. So that's what we got going there. And I just wanted to introduce that to some people maybe do not know that we have that service now. And again, the alerts go out when you trigger, if a stop's hit, and if the target's hit. Green buttons, you can just go to it. These are active trades. If it hits yellow, that means its target's been met. If it hits a red, I mean it was stopped out. And if it's watching, it's still active. Now this automatically all gets. This is all on the back end. It gets is all running through programs and stuff. So it automatically updates and sends out the alerts. And each one of these alerts, when you send them out, you'll get this chart. You'll find out the targets and stuff. It's very small right here. You can't really see it, but it's much bigger if you click on the large screen. And then you actually get to see how the stock actually reacted. Let's see if I could actually make that a little bit bigger. I made it a little bit bigger for you guys. So we pulled back into that buy zone, popped right up through the target area. And still a very nice, recognizable pattern. And you'll see the notes that go with it. Let's see if we could do this. One last thing. We'll zoom out of this one. And just give you an example on Corning here. So we're in the Corning. You could click on notes right there, and you'll see nice risk reward, but roll over for the quality names, potential bigger term market. So again, we had actually got into the Corning today, so Corning looks great. All right, so that's it. Just want to introduce you to HPS. That all can be found on DayTradingRadio.com. DayTraderRockStar, and I hope to see you in the markets.